Spain comes out, as the most attractive market and certainly also the most active market when we talk about solar PPAs. And I think we've seen already this year a couple of deals that has already been announced in the Spanish solar market. And obviously we saw the result of the auction.
Hello and welcome to Energy Unplugged by Aurora. This podcast features various experts from Aurora having in-depth conversations with key industry leaders, policymakers and academics from all over the world. It explores the hottest topics across the energy market and gives a unique perspective on major energy issues.
Welcome to Aurora Energy Unplugged. I'm Oliver Kerr, US Country Lead at Aurora. And today I'm very excited to be joined by not one, but two guests, both from LevelTen Energy, the world's largest renewable energy procurement platform. And both really with an enormous wealth of experience between them, transatlantic experience really in the renewable space. So for my first guest, I'm delighted to be joined by Jason Tundermann. Jason is Chief Operating Officer based in the USA, where he looks after all aspects of the business. Everything from analytics to asset M&A and developer relations. And having spent a bit of time with Jason, I can certainly attest to both the depth and the breadth of his knowledge across all of those areas. Prior to joining LevelTen, he spent around 8 years at Lincoln Clean Energy, which is, of course, now Ørsted. And that brings me on to our second guest, Flemming Sørensen, VP for Europe. So Flemming recently joined the LevelTen team from Ørsted to spearhead LevelTen's expansion here in Europe, based out of their headquarters in Madrid. And Flemming, if I could start with you, your experience over the last 20 years feels in many ways like, I would call it the perfect preparation for your current role. Let me get this right. You've done sort of project development at Ørsted. You worked on the procurement side at Novo Nordisk. You did portfolio management at Energy Denmark. So I think it's fair to say that you know a thing or two about buying and selling renewable power. How has the transition to LevelTen been for you?
Thanks, Oliver, and thanks for the introduction. I actually think it's been a super exciting transition into this role that sits really in the middle of the buyer and the seller on our two-sided marketplace that is built to really try and, expedite the PPA transaction experience between the seller and the buyer. And I, having spent a lot of time at Novo Nordisk, which is a super aggressive, sustainability-oriented pharmaceutical company, and I was looking after their energy procurement, and including that was the implementation of global solutions that could meet their 2020 RE100 targets. So really looking at renewable energy solutions and projects across the world. And one thing you quickly establish is that it looks very different depending on where you are sort of regionally, and also that it's actually quite challenging to compare projects, and in some cases also to identify project opportunities, and that's one of the things that LevelTen tries to facilitate, and another thing that you always, when you're on the sell side of the table, as I were with Ørsted, trying to originate PPAs from their offshore wind projects, you're looking at where are the buyers at, how do we find them, how do we engage them in a productive conversation, and again, this combination of obstacles, if you will, between the parties that actually want to meet and engage as a contract is what, having experienced those from both sides, is what attracted me to the LevelTen team, because it's really what we're trying to help improve.
Definitely something I want to come back to. Presumably the weather in Madrid is also beats Copenhagen.
Yeah, particularly this time of year, right? Here in January and February, there's not much fun about Denmark's weather, at least.
Now, Jason, turning to you, I mean, first of all, I hear you've had issues with power today, so you're speaking with us over the phone from Colorado. So apologies to listeners for the connection troubles.
Yes, thanks, Oliver. Sorry about that. It's, I guess, one of the things in this day and age when you wake up to a neighborhood internet outage, you dial in by phone.
No, Jason, I think the last time we met was in person, or around this time last year, actually, in a restaurant of all places, obviously back before we knew what was about to hit us with COVID. I'm curious, how was your experience at launching the European business right as a global pandemic was breaking or unfolding around you?
Well, it was definitely exciting and lots of unexpected twists and turns. I long for the days of meeting people over coffee and attending conferences. I think really we started from the fortunate position of having already developed and operated a successful marketplace in North America for a couple of years. That meant we initiated our European expansion with a number of key pieces already in place. We had strong relationships with global developers. We had strong credibility with buyers and sellers in the marketplace. And we'd already constructed a streamlined platform, a user interface, and an analytics engine that was tailor-made with expansion in mind. And finally, we had a number of strategic investors who had a significant European presence who were extremely helpful helping us launch this expansion. From the pandemic perspective, I think we were also, frankly, just really fortunate. We announced our launch at the Resource Conference in Amsterdam in October of 2019. That's when I moved to Europe. That ended up giving us a solid 5 months, which is not a ton of time, but it was really enough for us to build our regional developer relationships, to develop localized analytics and contracting structures, including our relationship with Aurora, to fine-tune pricing standards, and then lay the foundation for a headquarters in Madrid, and finding Flemming. My very last trip during my stay in Europe was to fly to Copenhagen and interview Flemming, who ended up being our lead candidate by far. So by the time the lockdowns arrived in March, which triggered my return, that also coincided with a March launch of our first pan-European RFP for one of the world's largest renewable energy buyers through the recently expanded platform. So it was a wild ride, but very exciting.
If I recall correctly, I think there was a mad dash involved somewhere as you tried to escape Paris with the family before lockdown kicked in.
Yeah, we bought 5 different homebound flights, and 4 of them got canceled. So it was exciting.
I'd like to start with a question around the bigger picture, and maybe Jason, this is one for you, which is, how do you see the role of the PPAs within the broader energy transition?
Yeah, I mean, the reality is that to do what we need to do to transition to a world that is largely powered by renewable energy, approaching 100%, we truly need participation from absolutely everyone, from corporations and government and utilities, really anyone who's consuming brown power. And that needs to happen very fast. And it has not been happening fast enough. So, PPAs play a significant role. And the great thing about PPAs is they can take so many forms. We have specifically designed and are adapting our marketplace to accommodate as many of those forms as possible. Traditionally at LevelTen, we started out as facilitating corporate virtual PPAs in the United States with independent projects in the U.S. And that's not the only form they can take. We certainly hope and expect that corporate procurement will continue along the trend that it has. But utilities are buyers and sellers. When they buy via PPAs. When they sell, they sell via PPAs. Those are both structures that we accommodate on the marketplace, and have also expanded some of our services to help facilitate the purchase and sale of the assets themselves. So moving assets into the right hands with the right capital for that moment in their development cycle. So from a PPA perspective, our goal and our mission at LevelTen is really to make that process less time consuming, less expensive, and less risky. And our hope is to drive towards that 100% target as quickly as we can.
The 100% target is interesting because I mean it's relatively easy to see why PPAs are a hot topic right now. I mean, you've got renewables increasingly exposed to merchant risk, either because it's hard to get or impossible to get your 25-year utility PPA these days, or because government is increasingly less willing to take on all of that price and volume risk. On the demand side too, you've got, among corporates, increasing awareness around sustainability, around ESG. So, those two things combined are driving, huge growth and interest in the market. But like you say, getting to 100% renewables, getting to net zero will require such an enormous deployment of renewable energy. So if you fast forward 10, 20 years, let's say we're getting close to net zero, you've got a huge amount of low marginal cost generation on the system. What in that world is driving further investment in renewables? How much of that power has been traded via PPAs?
Well, I think one trend we've seen, and that's borne out every year, has been reduced construction costs and increased efficiencies from a technology perspective. So if prices come down, due to the increase of low marginal cost power, well, number one, that means we've all been doing our job. That's really the end state that we're looking for. To the extent that those market cost declines are paired with offer declines, and that can either be through technological developments or through government incentives, U.S. tax credits, European carbon pricing, those measures can certainly help bridge that gap. If we find ourselves in a place where the LCOE is above the market price, we'll still see corporates buying as a result of their sustainability targets and their ESG metrics, both internally and externally from the investor community. And that's another major trend we've obviously seen is the importance of ESG metrics as some of the world's largest global investors take that as a really critical lens, both as a result of their constituent investors, but also in a recognition that climate resiliency is an important value add in their investment. I think those trends will continue to be large drivers. And I think we'll also see the advent of new structures that help buyers manage the risk. That risk management always comes at a cost. If you transfer shape risk or price risk to somebody else, they will charge you for it. But it can help risk adjust a corporate's portfolio so that they can achieve their sustainability goals while also managing their market exposure risk. Some of those products are in the market now, and some have caught on. We see a lot of retail sleeves. That's been a significant component of European corporate procurement for a while. It's happening more and more in North America now. You see some aftermarket agreements that buyers can bolt on to help manage price and shape risk that haven't quite caught on yet, but are beginning to circle around the market. So we're hopeful that those are trends that will help accelerate.
Yeah, I mean, that's an interesting one. I mean, in that sort of super high renewables world, so what do you think the risk tolerance for corporates to take on some of that risk is? Or is it that government or utilities just have to step back in to take some of that risk or sharpen some price signals through things like carbon pricing?
Yeah, I mean, if we're in a world where there's a very large gap between the cost of renewable energy and the market value of that energy, we work with a lot of corporates, and so far, they may be willing to bear some premium for renewable energy. Fortunately, they haven't had to in recent years, but especially a premium if it comes along with a risk adjustment. But if there is a large gap, I would expect that would need to be plugged in some way by an incentive package to help narrow that.
When you're thinking about the total size of the market, you don't see that biting for at least a little while. So is the sort of more immediate constraint just the number of credit-worthy off-takers, or what's capping the growth of renewable PPAs right now?
I think there are a couple items that we can point to. You mentioned credit, and buyer credit ratings are still a limiting factor in the market, but I think corporations are finding new ways to deal with that. It's also been mentioned that BRPs or midstreamers are helping some of these customers take on actually the PPA commitment against the developer and then sell back to the customer a different product or a similar product along with the GOOs, and that arrangement I think is helping a lot of customers actually engage in PPAs. We've also seen an increasing number of aggregated deals in the marketplace, and they can be ones where there's a very large seed member of that aggregation that sort of takes on the credit worthiness on behalf of the group and allows others and smaller players to come in and take part. And LevelTen has done a few of those, and other places have done a few of those, and I do think we'll see more of those, particularly as we'll be seeing corporations also tackle their scope 3 emissions, where we're reaching a different maybe tier, if you will, of corporations that either want to or need to engage in order to stay compliant with their customers. So aggregation will definitely be a thing to watch. I think the pace of development in general is a limiting factor, and that's not to say that there's not significant growth in the number of projects being developed, but there is a limited amount of space available, and certainly space available close to where demand is in terms of consumption of electricity. So I think that's going to be a limiting factor as we look 5 to 10 years out for sure. And in order to sort of have large volumes of renewable generation moved from one end of a country to another, like for instance the north of Germany down to the south of Germany, or from the south of Italy up to the north of Italy, it's just requires a massive amount of infrastructure investments that take time. And again, we are seeing an increasing amount of, I think, opposition, if you will, to onshore wind, and in some cases also solar. So I think that's a limiting factor, and whoever owns good sites, will be in good standing over the coming period.
Another interesting part about this, building on what Flemming just said about the PPA market, is that when we're thinking about PPAs here in this discussion, we're often thinking about the development of new projects and how those can get financed through offtake agreements. I mean, if we're thinking about 10 and 15-year horizons, the significant majority of the operating fleet of renewable energy projects will come off their existing PPAs. And so that's another aspect for a marketplace to facilitate recontracting. It's very important, extraordinarily important, to bring new renewable energy onto the grid. It's also important to make sure that the existing projects with steel in the ground are able to continue to operate and provide fossil-free energy.
I suppose we've not seen a huge amount of that yet, but when those projects do come onto their merchant tail, do you see a huge appetite from corporates for existing projects relative to greenfield? Is there, do they differentiate between the two, or is it just, I need some solar, or I need some wind? Does it need to be additional, if you like?
Yeah, I mean, it really depends. The gold standard is certainly additional renewable energy supplies to bring a new project out of the ground. We have seen, and the market has certainly seen that unbundled GOs or recontracted assets can often be a stepping stone for corporates to move into their own renewable energy transition. So that's something that we certainly encourage additional PPAs, and the vast majority of all of the corporate clients that we've worked with directly, that's been a starting point, a cost of entry. But there's certainly companies out there that aren't ready to jump in with both feet, and providing a solution for them as well is important.
A let's talk a little bit now about the role of marketplaces. One of the challenges right now in the PPA marketplace, which I think you mentioned up top, is around lack of standardization, lack of transparency around prices, all things which LevelTen is trying to solve. I mean, do you still see a role for, I suppose, what you might call a more traditional sort of bilateral approach to deals? Like, how much of the process can be sort of automated, or is it just a bit like buying a house where people just like the human touch you get from someone like an estate agent or a broker?
Yeah, it's a good question, and it's not really an either or from our perspective. I mean, LevelTen operates a marketplace where developers upload their development details and from all of their active projects, and they've posted pricing offers that buyers can view. We've identified and specified standard contracting structures for them to price to. So, we're looking at apples to apples. All that being said, the vast majority of buyers on our marketplace will run an RFP through our marketplace. We've structured it intentionally in a way that allows them to do that very quickly and efficiently, weeks, not months. And importantly, by the time they run an RFP, they have been able to spend some time, whether that's weeks or months, actually learning the terminology, evaluating risk and value across multiple markets. So the marketplace itself can perform a contracting function. It can also perform an educational function. So when that buyer comes to market and runs a tender, they are ready to transact quickly. They have strong expectations and accurate expectations of what they're likely to see. And so there's really a combination between marketplace and RFP engine. I think the most important point, though, is that the way the traditional RFPs, the way things have historically been done, has been extremely inefficient. It's been, every corporate buyer, utility, buyer advisor running a bespoke tender, asking really the same community of developers for different information via spreadsheets and PDF proposals, introducing the possibility of human error, as those are all copied and pasted together. Certainly, there's limits to the analytics that can be performed on an Excel-based platform. And so LevelTen, most of us at LevelTen are former developers, and we experienced that pain point firsthand and really set out to build a platform that intentionally solved many of those problems. So introducing standards, consolidating analytics in a single platform, assembling a global supply database where all developers could have a central point to upload their projects. Once the projects are uploaded, it's very easy to respond to an RFP without spreadsheets or PDF proposals. And then pairing that with a suite of online tools and standards that allow buyers to walk through that evaluation process, looking at value and risk, looking at a range of forward curves, including Aurora's in many markets, and then layering it with an engine, a proprietary risk analytics engine that LevelTen has developed. So it's I think there's a real opportunity for marketplaces to perform a consolidating function and really accelerate the PPA process as a result.
I'm curious what the market, how many of these marketplaces will exist in a few years' time? Is it like eBay, sort of Amazon, one or two big platforms, or is there room for multiple players here?
I mean, the magic really happens when that activity is consolidated in a single place. I think, like Amazon and eBay, there's certainly room for platforms that take a slightly different approach. In the renewable energy space, which is broadly defined, there are certainly opportunities for marketplaces that focus on different products. One that we've already talked about is existing supply versus new build supply. I mean, there are marketplaces out there that allow the purchase and sale of short-term PPAs from existing assets. There's new products that may come to market through marketplaces like carbon offsites, on-site solar, residential. I mean, it's a large and growing category, and it's really ripe for the introduction of an infrastructure approach.
Okay, so maybe some potential for specialized marketplaces, but I mean, to me at least, it does feel like some sort of consolidation is inevitable. Flemming, I'd like to bring you back in now and talk a little bit about some of the trends you're seeing in PPA markets across Europe. I'd be remiss not to ask you about COVID. I mean, did it turn out as bad for the PPA market as might have been expected at the start of the pandemic?
I don't think we've seen evidence of that. In fact, maybe the contrary. But it's true, we did expect in March last year or April when we were starting to figure out how serious this actually was, that there would be a very significant impact both on project development but also on PPA prices as a result of supply chain complications and things like that. But we haven't seen that, at least not as to the same degree that we might have expected. In our most recent survey of developers, which was here in Q4, 26% only of everybody that responded to our survey said that they've had to increase prices due to COVID. And what they've done instead is they've tried to manage sort of internal complexity and costs, if you will. So around 20% said they've developed fewer projects than they had originally anticipated during 2020, and another 20% said that they had sort of scaled down on their operations in general or their overhead costs. So that's a couple of things that they've been able to mitigate any expected price increases.
I mean, that makes sense. I mean, in some ways, it sort of confirms my own view that there's probably been a bit of an overcorrection to long-term, at least in terms of long-term price forecasts in response to COVID. Especially because some of these projects are not going to get off the ground for another few years, and the relevant metric is not what is the price today necessarily, but what is the price 7-8 years down the line. But that's also not necessarily how corporate buyers would be thinking about things.
No, but I think that's a good point, right? We have, at least on the developer side, there are at least two schools of thought, if you will. One is that we care a lot about what the future prices look like when we set the PPA prices to the marketplace, and we look at forward curves and have our own internal curves most likely. And then there are another group of developers that really don't care. As long as I get my hurdle rate according to what it will cost me to build this project, I'm pretty happy. And you're right that most of the projects that we have on the platform and that developers are talking about when they respond to our survey are projects that won't be built for another, let's say, 2, 3, or 4 years.
And I think I saw that your was this the USA price index? It ticked upwards for the first time. I mean, what's driving that?
U.S. prices have sort of moved a little bit inconsistently, if you will, when you look at solar and wind. In 18 and 19, solar PPA prices in the U.S. fell, whereas wind PPA prices increased. But in 2020, they more or less increased across the board in the U.S. And what's really driving that is the outphasing of the PTC and the ITC, so the tax credit that's been the U.S. version of subsidy, if you will, and now they have been extended here with the entry of Biden, so that might, we'll see evidence whether or not that's going to mitigate some of those price increases that were visible in the market. In Europe, it's been a little different. We haven't really, and I'm going to say that's we only have 6 months of tracking, right? We launched our first PPA price index in the middle of last year, and we've really seen more or less flat prices. There's a minor increase in wind prices and a minor decrease overall in solar prices, but altogether it's quite small and insignificant compared to the increases that we saw in the U.S.
Who has the top spot these days? Is it Spain, Italy, one of those?
And top spot, what do you mean? The lowest?
Sorry, the lowest price. Yeah.
So the lowest price that we've seen for solar is actually Denmark. closely followed by Sweden and Spain. But if you compare that to sort of volume and scale, Spain comes out as the most attractive market, and certainly also the most active market when we talk about solar PPAs. And I think we've seen already this year a couple of deals that has already been announced in the Spanish solar market, and obviously we saw the result of the auction that was run here a couple of days ago, with 2 gigawatts of solar being picked up and another gigawatt of wind, right? So Spain definitely the most active and also a very attractive market, both for corporate and utilities, actually, to contract.
I suppose this is sort of hinting at something which you alluded to right at the beginning, Flemming, which is that, we can talk about a European PPA market, but, renewable economics and renewable development is just intensely local. I mean, what are the key trends you're watching across different countries right now?
I think overall we're really noticing, and obviously we're happy to notice that the demand continues to increase. I think someone mentioned in the earlier in our conversation that there are a variety of reasons why more and more companies are designing quite elaborate sustainability strategies, net zero strategies. More and more companies are signing up to the RE100 group, and they're really being pressured from a wide range of stakeholders. It used to be only the NGOs and other good folks that were trying to convince the rest of the world that climate change was actually real, and someone had to act, and there were early movers that followed those lines. But today, you're seeing your customers, your employees, and most recently, and which I think is a strong influence, is that the fact that shareholders are becoming, on a massive scale, very interested in how companies design business strategies that also are, let's say, climate resilient. And so I think that's one clear trend that we're seeing, and what's becoming apparent as well is that as corporations are educating themselves on what's actually available out there, it's often a sort of a hallelujah moment once you've approved your strategy. And then you go and try and figure out, how do we actually achieve those targets, and what products and solutions are actually available. And corporations and CFOs in particular will may stumble and say, well, this is not what we're used to doing. So I think there is a movement now that corporate PPAs, which a few years ago really was a tool for a relatively small group of companies, right, is now becoming a more mainstream, acceptable way of tackling your Scope 2 emissions, and potentially also a large degree of your Scope 3 emissions. So I think that seeing the market evolve, is an indication that the PPAs will continue to have a decent role as we move forward.
I mean, does that mean you're also starting to see a different type of corporates starting to think about PPAs? Is there more diversification there as you get down into that sort of next tier?
Absolutely. And I'm going to say now something that some folks have heard me say for many years, but that I maybe shouldn't say when I'm working for LevelTen. But the current form of the PPA is not necessarily a product for everyone. And I think that's a fair statement. So I think it's a great product, and I think it actually achieves real impact. And there's a growing number of companies that can get comfortable with the risks and complexities around that contractual structure, and that's great. So yeah, I do think that we're seeing an increased number of companies, and also a large degree of diversification across sectors and industries that are getting comfortable with this contract structure. So I think that's good, and I think the growth in aggregation deals, where even smaller or companies with no or poor credit rating can sort of come in under the umbrella of a major player, and allowing them to get a hold of economics and pricing that they otherwise would not have been able to is going to help drive the market forward.
Oliver, two things that I might add to that LevelTen specifically works on to try to create a broader product for a wider range of buyers is, number one would be working directly with retail electricity providers as a source of wholesale supply for them to then firm and shape and sleeve that renewable energy product as a retail product to the end user, which in many ways is a much more palatable way for them to procure renewable energy, and things like term and shape and risk can be adjusted in that process. And the other thing is to think about renewable energy procurement for corporations, particularly larger ones, from more of a portfolio perspective. So and we've constructed a range of analytics techniques that allow us to create conceptual portfolios and see how they operate from a value and risk perspective compared to individual assets alone. And so, it doesn't work if you're a small corporation with a very small load in one country. That's not really a portfolio approach. But if you're a broader multinational or global company, it does provide a way to tailor your procurement with your load and help manage risk through diversification and finding assets that match and are sized to where you might be pulling power from the grid. So there's some new approaches that we think can also drive access for new buyers.
And Jason, just before we close, I mean, you spent now a bunch of time on both sides of the Atlantic. Is there anything does it surprise you about the European market compared to the USA?
Yeah, I guess two things. I mean, one was the explosion of the European PPA demand, essentially right as we began to expand the marketplace to Europe. So, I mean, in hindsight, looking back, we started to see some numbers where, in 2019, European procurement was about 15% of U.S. procurement, corporate procurement. Just 1 year later, Europe had tripled and now represented about 50% of of U.S. procurement. So that's just an extraordinary explosion in 1 year, and that happened to be our first year of operating a marketplace in Europe. So it made us, it was great. It made us feel good about the timing of our expansion, and we certainly hope that trend continues. The other thing, and that surprised me, and this has to do with our analytics approach, is that we incorporate multiple third-party curves to allow a buyer or a partner to view different potential states of the world, and we're very happy with our relationship with Aurora to provide curves for a large number of European markets. In the U.S., with many of the curve providers we work with, we have to perform a lot of after-the-fact analytics particularly to take account of price cannibalization as renewable energy penetration increases. And we're pleasantly surprised to learn that many of the curve providers in Europe took a more sophisticated approach and built in a lot of cannibalization forecasts that we felt comfortable relying on, rather than having to kind of manipulate the data before posting it to our marketplace. So that was a pleasant surprise as we learned more about vendors in Europe.
I mean, key part of the business case, understanding the price cannibalization risk. Good. I mean, I think that's a great note to end on. But I mean, first, I'll finish as we always do, with a quick fire round of under or overrated. So I'm going to throw out a bunch of concepts for you, and either one of you, I think, can tell me whether you think this is underrated or overrated. So first, we have the role of ESG in driving renewables deployment. Is it underrated or overrated?
Oh, I'm happy to take a crack at that one. So I'm gonna say that it's actually underrated, as long as we're talking about ESG. That's sort of an influence on behavior among corporations, and I think the the whole idea that long-term profitability and not just EPS or quarterly earnings is driving investors' behavior these days is super valuable. CFOs are really involved in all of these PPA transactions, and if there's one stakeholder that a CFO care about, it's his investor group, right? So he's certainly willing to listen to that. So yeah, I think it's underrated.
I thought that might be your answer. The second one then, and maybe I've sort of gleaned this from your answer just now, Jason, which is price cannibalization risk for renewables. Is that a risk that you think is under or overrated?
Typical buyers of new PPAs, I would say it's significantly underrated. For many of us in the industry, it's one of the primary, or if not the primary thing we focus on, but it's not something that a new corporate buyer has heard of before or spends a lot of time thinking about. That being said, it's extraordinarily important as you're entering into a 15-year fixed price PPA, probably from a project in an area that's surrounded by similar projects. It really should be your primary focus. And I know Aurora spends a lot of time thinking about it. LevelTen spends a lot of time thinking about it. So you would really be at your own peril to not to look at it very closely.
Last one is the role of big tech in the energy transition.
I think I'm going to say overrated, but I don't want that to sort of imply that I don't think they're doing great things. I actually think tech companies have really built the modern PPA world, if you will, and continue to do great things in this industry. They are innovating. They are paving the way for others to join them, and they're educating the world on how to think comfortably about this. But obviously, they're also bringing massive additional energy consumption to the grids in which they operate. So the fact that they are doing something, I think, is a fair enough ask. So that's going to be my take on that. And
it's a very diplomatic take, I would say, Flemming. Excellent. Well, I think all that's left for me to do is to thank both of our guests today. So thank you, Jason. Thank you, Flemming. It was a real pleasure to have you. Thanks for joining me on the podcast.
Thank you very much, Oliver. It was a pleasure.
Thanks very much, Oliver. I enjoyed the conversation.
That was Oliver Kerr, US country lead at Aurora, speaking to LevelTen Energy's Jason Tundermann, their Chief Operating Officer, and Flemming Sørensen, their Vice President for Europe. Do keep an eye on our podcast feed for more in-depth conversations with senior members of the energy industry. The best way to do this is to subscribe on whatever platform you use. Thanks for listening, and goodbye.